This is my first webinar that I had to do by myself, because before I used to go to other people's platform. So it wasn't easy. And I actually had to call someone to rescue me. I said, what happened? I'm actually in the room, no one's there. So that's good. Yeah, I think awesome. That's wonderful. So I am going to start my presentation. So during the presentation, you're probably not going to, I won't be able to see like what's the question comes through. But at the end, you know, there will be you can just put your questions there. Actually, I don't know, is there anyone, you know, that got some burning questions that they like me to address that? Maybe I'll just give you like a minute or two and just, you know, type your questions there. I don't know whether I can actually allow you to speak or not. So I got a few people online with me. That's awesome, yeah. Hello, Jeremy, Dex, Spencer, Stephanie. We got Joyce, Andy, Anthony, Jason, Key, Roy, Johnny, Nash, Alicia. We got Billy, John, Tim, Aksha, Anthony, and Andrews. That's awesome. Yeah, and Ben. Wonderful. So no one has any, okay, is there any special requirement or disadvantage or applying for mortgage holder? Yes, we're going to talk about it. The effect of the virus, the effect of virus on property market. Yeah. Hi, Richard. Just give us your take on the lockdowns and then what you think the situation is. Yeah, okay. Yeah, so that's from Ross. Yeah. How long to stay on interest-only loan for, and how to eventually pay the loan for the mortgage? Okay, good. Yeah, okay. So we're going to cover all those ones. Yeah, awesome, awesome. Okay, so we're going to just, I probably, because some of you probably actually haven't really met me before. I think majority of you probably, you know, either our clients or actually in our property program. Yeah. But just for some of you that you haven't actually met me before, I probably just quickly just, you know, introduce myself. So I'm going to share the screen. Okay, so I came to New Zealand in 1999. So I've been here for a while now, and over 20 years. Yeah. From China, yeah. So my last visit to China is actually about a year ago, probably for like 10 days, yeah. So pretty safe, you know, in regarding to the coronavirus. I think I am, yeah. All right, and also I spent 15 years with ASB, and I was a mobile business lending manager when I was working at ASB. Also, before that, I was a business and commercial insurance manager. So it's kind of like a working close with a business manager and commercial managers, and basically come up with a plan to protecting their clients. You know, they're either in the business space or commercial space. So it's all about like a personal protection, but also like a shareholder agreement, shareholder protections, and also like a group schemes. So that's all sort of jobs that I was doing at that time. I was also an investment advisor for in ASB. That's kind of like in 2004 to 2005. And I was managing a branch during 2006 to 2007. So I funded a finance, home loans, and insurance in February 2016. And because I'm a property investor, so during the time I started, have a clients keep asking me whether I can mentoring them. So I started set up my mentoring program, Lucia Property Investment, in 2018. Right, and last year I published my book. It's a Financial Freedom, 5 Steps in 5 Years. And so this is a story of myself that, you know, went from living in the state house to building a $17 million property portfolio. And also now looking into forecasting to double in the next 2 to 3 years. So we got a couple like apartments, small apartment projects going on. Now it's actually going through the building consent process. So here's my team. So it's got myself, and also we have Nicholas and Ryan. Nicholas speaks both English and Chinese, and Nicholas is a certified financial analyst, and he just passed his exam recently, I think a few months ago, and he's actually sitting on the top 10 in the world, so it's really overqualified, being honest. And Ryan's our mortgage and property consultant. So for those of you that actually in our program that you haven't bought your houses, properties, we actually send out those weekly property listings, and that's actually from him. And our contact detail is actually on the slide, like our telephone number, and the email is the best way to contact us, because I know the guys, they are pretty busy. So always email us and let us know when it's a good time to call you back, your contact details, and then we will do that. And I know some of you actually provide prefer the email anyway. By the way, on top of the Nicholas and Ryan, we also have other couple of people working behind the scenes. So one is in the marketing side, and the other one is IT, our IT support person. All right, and I'm pretty sure you probably must be fit into either one of those one. Either you are the first home buyers or you are the second chance first home buyer. So second chance first home buyers basically you have your property before, but now you are no longer actually owns any property. So basically your name is not registered any title. The reason we're having that is saying that is for those first home buyers, the bank is more flexible with the LVR, the loan to valuation ratio, that you could go up to 90 or even 95%. Also, maybe you are the homeowners or you are the property investors. And I'm sure that you are the employees or you are self-employed or you are the business owners. Okay, so we're going to cover all those one today. So what does a 6 months mortgage holiday mean? And what happened in my house value dropped? What the bank called in my loan? And what does the OCR cut mean? And what will happen to interest rate? And how long will the disruption last? What happened in my tenants is unable to pay the rent. Should I wait to buy? Can the bank help me? And are there consequences? Will banks tighten up their funding policies? So we're going to go through that one by one. Okay. So 6 months mortgage holiday, it's actually literally it's a mortgage repayment deferrals. So basically you actually deferred, paying the mortgage for 6 months. So that means that you don't need to pay any principal or even the interest payment. So the interest payment will be added to your existing mortgages. And it's actually creating the compounding interest. So our advice has always been unless you really, really have a cash flow issue, leave this one to the last resource. So if you are still okay with your cash flow, still paying your mortgage interest, it is interest payment. Okay. There are also other ways extend the terms and things like that. So later we're going to go through what are the banks are offering, because all those banks, they have different offers that you can take up. So just remember, the holiday is not really a holiday. It's not like you are at work, you can go on holiday and you come back and all your work has been taken over by other people. Unfortunately, I think mortgage is still your mortgage. It's not other people's mortgages. So you still take the full responsibility of that. So when you go on holiday, come back, you got more work. You got more work to do. Basically, it's like that. Okay. The second one is what happened in my house value drops. So this is really, really concerning. What happened if my house value drops? Yeah. So the first question is by how much? What we're seeing is, and also what's the current loan to valuation ratio? So basically, what bank operator is LVR? What's the LVR? What's the loan to valuation ratio? And some banker, they will be quite tolerant. They might actually allows you to go up to even 90% and you are still okay with it. Some banker, they might be 85%, so you have to be careful of that loan to valuation ratio. But however, the bank also understand that, because the property is actually how can I say, it actually holds a value. So basically, once it's not like shares, it jobs, you know, like if someone actually doing the shares, they're using the margins, they probably get a call straight away. But luckily, I think with the mortgage, it's still very, the bank usually kind of leave it there, you know, like, so they're not going to actually regularly checking it or something like that. So don't get too worried about it unless your house value does drop significantly, like huge, like 30% or something. And I think I could see that, you know, there will be, they're going to call you and asking you to actually put more money into the to the bank because they want to reduce that LVR in loan to valuation ratio. Okay, and the other question is, which bank are you banking with? Because main bank, they are more flexible. However, with some small bank, they can be very cautious. Yeah, and if it's you are with lenders like you know, maybe I should have mentioned that. Okay. So we're going to leave this one. So basically, like, it depends on which bank. Usually, main bank, they are pretty cool with it. Yeah, okay. And also, is there a cross collateralizations? So basically, like, whether or not you have other property actually all bundled up together because the bank are looking at the overall situation. So say like you might have a 3 property with one bank. One property, it might be, it's not a quality one, it's out of town, it's in the region, it dropped terribly. And then you got other properties in Auckland. So basically look at the whole scenario, you know, whole situation. So you might find yourself that it's very safe. Although one property probably dropped 50%, but because Auckland's house probably hold on quite tight, you will be still quite okay. However, if it's you're unsure, just talk to us, okay? Right. So what the bank cut call in my loans, yeah. So I actually last week I started have a customer calling me, and I think what they are concerned, I think apparently there are, you know, some like not very nice people out there and telling customer that, you know, the bank is going to call on their revolving credits and blah blah blah. Yeah. So that's not true for sure. The lender actually tidied up their revolving credit a couple of years ago. So basically, like when I, you know, that's before when I was working in the bank, I was able to actually give my customer like $1 million revolving credit or $1.5 million revolving credit, as long as, you know, like providing the loan to valuation ratios there, they can still servicing because it's still considered as a mortgage anyway. But what happened is like with the revolving credit bank, they need to park their money there just in case the customer going to use that revolving credit. But what I found is a lot of them actually sit there and doing nothing. So basically the customer paying nothing, but the bank, they still had to have the money available for them. So that's kind of creating quite a bit of cost for the bank. So a couple of years ago, they pretty much tidy up, yeah. And what you can see is like most of them, they kind of have a limit. Some of them, they still don't have a limit. And we know that what, you know, which bank they don't have a limit. And we also know like they are maybe in the bank, you know, they probably have different product, like ASB, they have different product. They have one called like Orbit. They also at that one called Orbit Fast Track. I think not many people actually know there's a product called Orbit Fast Track. So with the Orbit, it's kind of revolving credit. So revolving credit, so basically the limits stay there, you know, just no change, yeah. So with that, the bank does have a limit. I think it's 250,000. That's the maximum that you can have now. And then the Orbit Fast Track, apparently you can still get $1 million. Yeah, so it, because that one is kind of like your limit does actually decreasing. So it's still available. And people, they were asking that whether there's a need for them to withdraw the money and put their money, you know, somewhere else. I couldn't see the point doing that. So basically, like usually they're not going to call in your loans. Yeah, okay. So I think we covered the revolving credit. Oh, right. Okay. So talk about unless there's a significant value reduction. And I think it's kind of like, you know, like if it's, we kind of cover it in like, if it's your house value dropped, you know, terribly. And of course the bank, they still had to keep an eye on their LVR, which is loan to valuation ratio. And yes, they probably were asking you to actually put up more cash and bring that, you know, bring that LVR to a certain amount. Okay, so so basically, like they need to manage that, you know, that LVR ratio. Okay, right. Okay, so the next one, what does the OCR cut mean? Okay, so OCR cut certainly gives the market a confidence. And it also means the cheaper fundings. And it basically just want to encouraging borrowing. Okay. So I think the OCR, which is official cash rate, now it's actually sitting at 0.25%. So that's actually certainly give the market a lot of confidence, and I think I personally feel that Reserve Bank has reacted. This time they actually doing a good job to compare to the 2008 GFC, because they took they took a long time to react. So every time when they cut the rate, that was like 12 years ago, during the GFC, I think they only just be very conservative at 0.25, 0.25, really conservative. But I think this time actually it's really good. Straight away they just jumped out and said, well, we're going to cut the rate, and now it's actually 0.25 now, right? And the next one is what will happen to the interest rate, and certainly it's on the downward trend. The bank actually had reduced their floating rate and pass all the rate cuts to the borrowers. All the bank all jump out and say, yeah, we're going to reduce our floating rate. The short-term fixed rate had been reduced by 0.4% to 0.45%. So it's still got a room there, I believe, yeah. But of course, because I think majority of the funding is actually from local, so they also had to keep an eye on the savers. Their term deposit rate, need to be a certain level to encouraging people to put the money into the bank, yeah. All right, and there are some small banks kind of offer like a 2.95% fixed for 12 months, yeah. And I think there are people who are talking about this like 2.95, but really it's not much different from the main bank, because the main bank now is offering, like what, 3.04%, 3.04%. So when you look at it, it's only 0.1% different. So this means that if you have $1 million, that you're only talking about $1,000 different in a year. And really, it's just not much different. And I think with the main bank, you will see that you still get those. If it's a new lending, you still get these like cashback, which is like up to 0.8%. Yeah, so it's still really good to stay in the main bank. So my advice is like, if you can stay in the main bank, stay in the main bank. And sometimes, yes, you have to consider a small bank, but it's only for like it could be like just the serviceability or something like that. But don't just jump because there's small benefit in the fixed interest. That I couldn't see the point. I always say like a major and major. It's always a focus on the major matters rather than those like a small little issues. Yeah. Okay. All right. So how long will the disruption last? This is my personal view. I personally feel like possibility probably 2 to 6 months or until the vaccine is available. And I think some of you probably been following this. I think there are vaccine available in China and in America, and they're already testing on humans. Yeah. So I think that in China, I think that was the 16th of March, they started doing the testing. So hopefully it's not far from where we can actually have the vaccines and also like roll up, to everybody. Okay. And I think it's very important to also thinking ahead, of course, like after the event, there will be a ripple effect, because even like now, say like 4 weeks finish, we can all go back to work, but it's still a lot of like, effect in the economy, in the business and things like that. Yeah. And so they probably still will have people actually, they're losing their jobs and things like that. Yeah. So bear in mind that it could still last. And possibility might have a second wave, like the virus might come back and might have a second wave. What I'm trying to say is like it definitely will have an end. And I think for whatever it happens, they will have they definitely will have it will come to the end anyway. It's just like when people go into the 2008, they thought it's just like, oh my God, it's just like, it's going to last forever. It's going to have like an end of the war. But obviously none of that is happening. So what I'm trying to say to you is probably just, keep positive, and definitely it will have an end, and vaccine is available. Okay. All right. So what happened if it's the tenants not paying the rent? So this actually come down to find out why, because with the government coming out to say, like whoever got a mortgage, they can have a mortgage holiday, and since like creating a lot of like confusions, and the tenants, because our customer ringing me and say, well, the tenants is saying like, oh, if you got a holiday, of course we deserve having a holiday too. But that's not true, because it's not really a holiday. It's just, that you still have to pay the mortgage repayment. So just they didn't understand that, like you still have to pay the mortgage, okay? And also like work with them. If it's your tenants, unfortunately, actually losing their jobs, suggest them to talk to the one income. And the other thing is to check with your house insurance policy. I think that if it's your property, because usually they have this one called landlord cover, and it's actually called loss of rent. And I think there are some different scenario, like if it's a house become like habitable, basically like no one can live there, of course they will pay you. And also like if it's the tenant actually abandon the house, they don't pay it. But if it's so I think it's still a bit of process. You need to get the you probably have to go to the dispute tribunal and have a piece of paper to prove that, like to actually to be able to claim your house insurance and things like that. And another thing is like I always encouraging people is like don't be a landlord, be an investor. So with all those jobs, I mean like with this title, like managing the tenants, it shouldn't become your job. It's not something that you need to spend time to do. And you rather actually leave it to the professional, like like a rental managers, and then they will handle it. Like if these things happen that right now, it's not you to actually have to talk to the tenants. It's their job to actually talk to the tenants and things like that. So always encouraging you to actually become an investor, because it's very important that you focus. That's actually your major matters is being investors. At the end of the day, you don't want to be just like a nanny for your tenants. Yeah, you don't want to provide a 24/7 services to your tenants, and their problem shouldn't be your problem, being honest. Yeah. Okay. All right. So shall I wait to buy? Because obviously we do have a customer actually during the downturn, their business actually doing well. And maybe just give you an example of because during the downturn, people had to stay home now, like us, we had to stay home now. So you probably see like those rubbish bed companies, like they had to produce more now. I think the supermarket, because all the restaurants or cafes are shut down now, so their business actually doing better. Okay, and there are people actually they can still invest. Okay, so the suggestion here is of course is get yourself ready. So don't wait because now it's locked down something. We still operate because financial services is an essential services. So we still operate. We still have a customer actually. The mortgage is still going to settle, coming up settlement. Because we can still do refinance. Like for the new purchase, it probably be hard because you couldn't move in or the tenant couldn't move out or or move into the new place or something like that. So for the new purchase, it has been pushed out to May. But for the refinance one, the people they kind of in the process that because usually that we had tidy up your existing finance before we can actually even go any further. So and the lawyer they still working. They can still do those register title online. They can still see their customer. Like through the videos, conference and things like that. So just bear in mind that nothing, like in the finance, like I think the accountant is still working. So in the financial services still considered as essential services. So we're still working through. So my advice is getting yourself ready. And I know that you can't, at the moment, you probably cannot, you actually can't go to open homes and something like that. And I'm never ever encouraging people to buy property, without saying that, because at least you always do a drive-by. But now, of course, we can't do it now. But what I'm saying is like, get yourself ready. And once the open homes available and things like that, just go up there and start investing. And I can share something with you is that we actually have a clients already transfer millions from overseas, and pretty much they're actually just getting themselves ready and trying to actually heavily investing in the properties. Yeah. Because obviously they are still people that they need to sell their property, for any reason, and we are just there to helping them to actually sell their property, because there are some people that had to cash out, they had to move on, so we just there to helping them anyway. Okay. All right. So the next, can the bank help me? And are there consequences? And yes, the bank, actually the bank, they always have this like a hardship, the assistant available. All the bank, not just because the COVID-19, it's not just this time they had this. They're always having this like a hardship assistant. That's how they call it. Yeah. And they're slightly different. So I'm going to share with you like what's in there. So with ANZ is you can actually extend the long term to 30 years. Yeah. So basically, like you might actually took out a mortgage 5 years ago. Now it's 25 years now. So you can actually extend that to 30 years. Yeah. So if you want to find out like how much repayment will be, it's quite easy. Just using a mortgage. You can Google it, mortgage calculator, and it will just tell you. So it does actually give you a bit of cash flow relief. And also they can do interest only repayment for up to 12 months. Yeah. So for these ones with ANZ. Okay. So with ASB is big stingy. Yeah. You only got 3 months. Yeah. So interest only repayment on home loan up to basically like you just need to pay the interest and it's up to just for 3 months. Or like you can have a home loan holiday for up to 3 months. So interest will still be added to the loan. Yeah. Okay. And also you are ability to extend the home loan term for up to 3 months. So just remember ASB and Solvent, because the Solvent and ASB, Solvent is kind of ASB's sister. Yeah. Lender. So Solvent is another lender we're using quite often as well. So basically everything's 3 months. Yeah. You can have an interest only for 3 months. You can have a home loan holiday for basically defer your payment for 3 months, or you can extend your home loans for up to 3 months. They also provide a temporary overdraft as well. And so that's for ASB. BNZ. So BNZ, it allows you to actually reduce your repayments. So basically like reduce the repayment to the minimum level where possible. So that's kind of in some way is extend your mortgage. Because it might be like over the in the past like couple of years interest rate reduced, but the customer actually still choose to pay the same amount. So basically they actually shorter the term. Yeah. So basically they can actually reduce that payment to the minimum level. So still like go back to the like kind of extend their term, the mortgage term. Yeah. They can also go for the interest only for up to 12 months. Also, they can defer, that's what like 6 months principal and interest repayment deferred. So basically, like the customer can defer their mortgage repayment for 6 months as a maximum. Okay, so now let's look at Westpac. So Westpac, pretty much the same. You can reduce your loan repayment amount, which is the extended term, restructure your mortgages. So basically kind of like extend your term as well. And also you can take the payment holiday, which is a 6 months repayment deferral. So pretty much like what the bank are talking about is actually, they're all pretty much similar. 3 things, you can have interest only, you can have you can defer your mortgage repayments, and also you can extend your long term, sort of things like that. Right. However, so this one is actually kind of like on their website. It does say like the impact of receiving the financial hardship assistance. So this is kind of the consequences. Yeah. So basically, as part of this process, it's important to know that we may need to ask for your credit report from, basically they're going to do a credit check on you, and your hardship assistance will be considered during any future credit applications from us or other lenders. So basically, that's become a record in your credit check anyway. However, while you are in hardship, we don't report to like on how many days your payment may be overdue. Okay, so basically is it does they will do a credit check and it will be in your record. Okay. Our advice is being like, if it's you really have a cash flow issue and you need to defer your mortgage repayment, do it. Okay. But if it's you, you don't really need it, because we have people that is like, like, oh, I don't really need it. I say, if you don't need it, just don't do it. Yeah. Just use this as your last resource. And for some of you, you might actually have a number of bank, like you have, mortgage with different bank. And now it's time to actually have to review it and then see which one that, might be, because you probably don't really need to asking all the bank to defer your mortgage. It might be you might want to consider one or two. And we're happy to actually go through the process with you, and then just, give you some advice that, which one to apply and things like that. Okay. Okay. So what the banks tighten up their funding policy? Yes, they are. So basically, we already have a bank was saying like they are not interested for new to bank clients. So what I meant is like they're happy to help out their existing customer. So the existing customer, that means the customer had their salary or wages credit to that, to the bank, and also they have mortgage there. So that's considered as existing customer. However, if it's someone actually don't have any relationship, or they might only just have a bank account and never use it, that's considered as new to bank clients. So they are not. So we do have a one bank actually just telling us don't send anything over if it's new to if it's new to bank. Okay. All the other bank, they kind of asking that we need to, when we actually submit applications, that we need to actually make it clear whether the customers their employment still still there. Okay. And so we kind of had to put a bit of more effort, in terms of like presenting our application and everything. Okay. But in general speaking, I think they are still lending money. Okay, they are not like closing the door and say, well, they're going to, raise the loan to valuation ratio, or they're going to raise their test rate, which is like just make it harder, for people to borrow or something like that. So none of the bank is doing that. So you are fine. So I think with this particular one, they said they only want to helping their existing customers because they got so many inquiries goes in, and then so much work, for them to actually trying to keep them afloat. Yeah. So understand that. Yeah. Okay. On the non-bank space, it's tough because we have seen like the non-bank, they kind of just saying like they want to actually take 14 days. They don't want to do anything, but that doesn't mean that they just pretty much shut the door. So basically, like at the moment, they are kind of like be a big selected, the security that you provided. Because with a non-bank, the first things they look at is your security, and then some of them they probably look at your serviceability, which is your income. Yeah, okay. And also the LVR, which is loan to valuation ratio, because obviously they are the asset lender, so they are a bit worried about what happens if the value dropped, and then they're probably unable to recover their money and things like that. The risk is high, running high and things like that. So bear in mind that with the non-bank space, it's pretty much it's quite tight now, unless they're still doing that, but unless the LVR is very strong, like the customer has a really strong loan to valuation ratio. So when I say strong, it's a really low LVR. So it might be customer only borrowing 50% or something. So they're still comfortable doing that. And then the property is in Auckland. It's a nice, good quality property and stuff like that. Out of town is tough. And if it's out of town, I think you're going to see most of those non-bank lenders. They're just not interesting because there's too much fluctuations. With those regions. Properties, yeah, and I think even in the regions, apparently, I think some property investors are getting worried now because if the tenants are unable to pay the rent, losing the job, and things like that, those tenants eventually, after the lockdown, they probably started thinking about how to move into the main center where they can find work, they can find a job and things like that. So if you got anything out of town. I mean that you probably realize that I'm really, focused on investing in Auckland, especially if you can just, stay in Central Auckland, because coming to the investment, the first things is your money had to be safe. And second things, you started talking about the returns and everything. But a lot of people actually go upside down. They look at the rental return and they look at the return, the yield and things like that, and then they're tracing the yield outside, outside of Auckland. Yeah, so it's just really silly to me. Yeah, okay. All right. So what are the government support? So I think there's a COVID-19 wages subsidy, is it? Yeah. Okay. Subsidy. Yeah. Okay. And I think I am not expert on this. I'm just quickly going through that. And I think next week we will be organized an accountant to actually talk to you in detail, like who's qualified and how you can apply and things like that. Yeah. So I'll just quickly cover that. Is like, so for people full time, which is like working 20 hours, so 20 hours considered as a full time or more. Per person can get 585 and 80 cents per week, and for part time is $350 per week. And to qualify, I think you need to prove that your business actually had a reduction in revenue by 30%. So and also it's affected by COVID-19. So I think some business is really clear, like retail shops, restaurants, cafe, because they had to shut down. Yeah, so that's really clear that you can see that. Yeah. But for our business, it's a bit hard because what we see is the customer push out their settlement day to May now. So we're still going to wait to see. And the advisor from my accountant, and she just suggested, she said, well, just wait until the end of the April and then see, what's it like. Yeah, okay. All right. So what should you do? So that's before event, I was sharing with people that, keep calm and also review your financial positions and do your budget. And if there's a shortfall, adjust your lifestyle. But obviously now, no one's got a lifestyle now because pretty much, you only got very minimum lifestyle now. All right. And review your mortgage because it's very important that at the time we can still actually shuffling things. So we can still do a top up and things like that. Very important to set up a buffer and invest if you can. So I keep saying that, like if you got a position, your job's still there, your business still there, and you are in a position, just continue to invest. And very important to build a passive income. So we can talk about a bit more later. All right. So this is during the lockdown. So of course, just keep calm and understand what's COVID-19. And I got this one here because obviously initially I wasn't quite sure. I thought I had COVID-19, but I realized no, I just having a cold. Yeah. Okay. So I think there are some significant difference is with the COVID-19, you have a breathlessness. So you feel like a breath difficulty. Yeah, okay. But you won't see that in flu or cold. So if someone sneezes, most likely is they're having a cold. Yeah, okay. So don't get too panicking about okay. So this is very clear that what most likely that if it's the symptom that people have. Yeah, okay. All right. Okay. And then adjust your routine. So it's because now you got no, pretty much you got no lifestyle now. So you just have to adjust your routine because like before you after you get out, you probably had to go to work, you had to drop the kids off, pick up the kids, all sorts. Yeah. But now your routine is absolutely different now. So we're going to talk about a bit more detail, like adjust your routine, and then also like review your financial position. Again, just do your budget, what's your income, what's your outgoings. So we'll cover that in a minute. Yeah, so it is a shortfall, talk to us first, and then we can actually see, what's the best way to actually coming up, with the, to actually cover that shortfall. Yeah, okay. And also plan your future. I think you got a lot of time now. You can do some planning now. And again, get yourself ready and build a passive income. So we're going to look at adjust your routine. Yeah, okay. So it's very important now that everybody had to adjust you had to adjust your routine. I had to adjust my routine as well because now it's wake up in the morning and no longer that it's because usually I kind of go to office probably between 10 to 2 o'clock, and I probably go there maybe 3 days a week or something. But now we're no longer doing that. Now we're just doing a team meeting, you know, over the video at 9:30, and also at 4 o'clock, just check in with everybody and see everybody. And I think everybody's still very cheerful, which is quite good. Yeah. Okay. So the first thing is that you need to systemize your day. So you need to know today what you're going to do. Yeah, because when people they don't know what they're going to do, you can be depressed because you, oh shit, I got so many. What should I do? You know, like stop asking what should I do. So systemize your day. So after you wake up, what are you going to do? Yeah, okay. And very important, every morning when you wake up, appreciate it. Don't take it for granted. I mean, we're very lucky that we can still wake up. There are some people that couldn't wake up. Yeah. Okay. So I mean, we're very lucky that we can still breathing. We can still see. You know, like we still alive. You know, we're still alive. Yeah. So appreciate your day. Appreciate you know, that people around you. Anything. You know, just don't take it for granted. Yeah. And also exercise. Make sure, because I found myself I had to. Before I normally just do a morning exercise, and then you kind of like busy with your day. But now I kind of like a split to exercise in the morning and also afternoon. So afternoon, I might actually go for a walk, and perhaps I probably will jump into the you know, like have a swim, you know, yeah, or spa or something like that. Yeah. So you probably realize you need to do more exercise because you're probably going to sitting a lot. So, yeah. So that's actually not good for your back and things like that. Yeah. Okay. And you still working from home. I guess most of you probably still kind of like working. So you still have to manage your times. And ideally, is you got your separate area, just does your working. So I got an office there. When I work, I just go in there and it's my working time. Okay. Cooking. I guess some of you probably can be creative because I found it quite interesting that they just not allowed those takeaways to open, because in China they were, you know, during the lockdown, you know, like those takeaways they were still able to run. But I guess it's probably that's government's policy, you know, like but it's probably going to push people to learn how to cook and be creative or something like that. So if it's you enjoy that, you know, go and do it. If it's something, you know, on your to-do list that you always want to do in your life, go and learn the cooking. Yeah. Okay. And learning. Okay. Very, very important. Yeah. So just continue learning. So doing some readings, you know, watch videos, join webinars. Yeah. So that's all part of learning, because it's very important that you just continue to learn. Okay. Meditation is so important. So before I go to bed, I always meditate for 20 minutes. And I think it's quite good to actually take the stress away, because you could have a busy day and then your mind is racing all over the place. Yeah. So it's really nice that you could actually just focus on your breathing, nothing else. All you need to do was actually just, you know, you can sit at a lower, you know, like a position, or if you can't do it, it doesn't matter. Just focus on your breathing. Breathe, you know, breathing out, breathing in, you know, like in and out. You know, just really focus on it. Just, you know, calm down your mind. You find yourself actually have a much better sleep. Yeah. Okay. So that's how you actually adjust your routine. Make sure that, I think the number one thing is to systemize your day, and you know like what you're going to do today and things like that. Okay. All right. So review your financial positions. Do your budgeting. So what's your income? The income that might be including your wages, your salaries, or if you're in business, what's your business income, and also all your outgoings. So basically review your mortgages. What's the outgoings there? Okay, and also review the regular payments, because sometimes the people might be subscribed to something and then they absolutely forgot about it. So now it's a good time to actually do a tidy up. You know, just do a you know, look through all your accounts, because it's quite funny that when we're doing the mortgage for customers, sometimes we picked up those like payments and we say, oh, what's this about? And the customer suddenly realize that they are not aware of that there are payment going up from their account. So, you know, review the regular payments. And there are something you absolutely had to stop, like your gym memberships or childcares, or, you know, all those ones, you know, like I don't know what else people will subscribe. Yeah, but just, you know, tidy up your accounts and things like that. And if there's a shortfall, of course, they just actually show that you do have a cash flow issue, and talk to us. If you want to talk to the bank, you're much welcome to do so. But what we found is like sometimes the clients will like to actually kind of talk to us first and understand, like because it might be they have a multiple, a number of banks they're dealing with. They want to understand that which bank is actually I need to talk to. Yeah, so we can actually helping you through that process. So that's all free service to you. We don't get paid, but that doesn't matter. We just want to actually helping people to go through this. Yeah, okay. All right, the next thing is a plan. So you got the time now. You can actually start a plan for your future. Okay, do a lot of planning. Yeah, so even us, we kind of going through that as well. So at your personal level, look at like your families, your relationships. Yeah, okay. So a lot of planning, like where do you want your family be, like in the future? How about your relationships and things like that? Yeah, okay. And also in the business level, how about your career? Okay. When people, if you are employed, something I like to address is like don't change your job just because another company is paying you more. Always looking at like whether or not you can learn more. So just remember, when you are employee, you are there to learn things. You are not there to earn things, because if you want to earn more money, they can always come later. So I can just give you an example. This is when I first joined the ASB. They only just paying me less than $25,000 a year. I don't know what's the minimum wages at the time. So that's what I think January 2001, and I was paid not even 25, I think 24 something. Yeah, okay. And I remember like I spent quite a lot of energy and trying to get my pay increased. So I was trying to negotiate with my manager and things like that. But really, sometimes it proved to be unnecessary, because like they do actually recognize it. They know that they will actually just giving, they will actually offer it to you. Yeah. And so don't get upset if you've been declined, the pay rise or something like that. Just always make sure, like, look at what can you learn from your job, and don't, because even when I was working in a bank, I had a couple other bank, they actually approached me and asking me like to go and work for them. When I look at it, but I'm still doing the same thing. Why bother? Yeah, okay. Although yes, I probably get 10K or 20K at that time, seems like a lot of money, but I decided not to change the my job. And I think later on, when I actually went into the commission job, my income is rocky high. Was I think a year before probably making 80 grand, and then during the GFC, because I was actually in the insurance department, the business took off, and I think my income actually went up to like 378,000. So it was like just a huge increase there. So what I'm trying to say is like when you are employee, don't get too fussy about like your hourly rate or things like that. Make sure that you are learning something, and then you staying there in that job. Just continue to learning. Yeah. If it's not, always talk to your employer about like you want to learn new skills and things like that. In people, so in the business level, study planning, like in terms of your business, what can you do in your business? Because business is it's ever growing. How can I say? Because I'm just looking at in my business, there are so many things that we can do, and I think strategy planning is so important. Like, are we going to become this? Are we going to put more effort into the education, or are we putting more effort into the mortgage side or things like that? Like, so there are a lot of planning you need to do, and then seeing yourself like where you want your business to be. Like. In 2 years, in 5 years, in 10 years time, like a sort of things like that. So I think a lot of things you can do in terms of the business level. And also don't forget the social level, because that's actually part of us is we are in a community. Okay, so social level is like what will you be doing in your community, in your charity. So some of you might actually become the like a soccer coach, like for your son's soccer team or rugby team, or like in your community, what else you can do, like so you got time to think about it, and then just put some plan in place, like making sure that you do have a steps, and sometimes doing that, like doing the process, that planning process, it can take a couple of hours. So we actually do that. We got the end result we want, and we have to actually coming back, like, what are you going to do right now? Yeah. So this step is actually so important. Yeah. Yeah, so I don't know what else I can help you, but I always, in my business, I mean, even when I was working in the bank, I found myself, I'm not just a business manager or insurance manager, because what I found is like when that door closed and it's only just you and the customer in the room, suddenly they open their, they open themselves to me, and it might be the family issues, the relationship issues, or something like that. And sometimes as outsiders, it's quite easy to actually just lay out all the facts, and the client, actually people knows what they need to do. It's just like they just need another, like, someone to bounce the idea back and things like that. Yeah. So so I think I can share something. Was once I had this lady, and this lady was actually investing in property. Okay, so nothing, like, because I'm always talk about investing in property. So that's many years ago. And I think, but every time when I was talking to her, and she was always a bit depressed because she feel that her life is useless. Like she's actually doing well in properties and things like that, but she also feel like you know, she's got a kind of like a depression there. Yeah, okay. So basically, what I said to her was very simple, just one line. I just said, well, it's always good to investing in property, but have you also thought about investing in yourself? And then she started talking about that she always want to become a midwife, like sort of things like, but she never ever kind of like explore that, like a possibility and things like that. But because there, she started, actually went out and then, did some research, continue, start his learning, like, and then later on he become a midwife, and like later on when I actually saw her, you can see like she's much happier because she's found something that, because you have to understand, like the world is not just about yourself. It's not about just yourself being rich. You got lots of properties and things like that. No one cares, yeah. But it's like how much you can actually do to other people, to help other people, to your community, that counts. Okay, so just remember this, it's very important. And also it's good for your mental health as well, because the more you are able to help others, you found yourself having that sense of the purpose, right? Okay. Right, so very important, keep learning, especially now you got a time to do it now. And you can through the reading a book. I still got my book here, which is from the Richard Branson. So I'm going to finish that. And yeah, and I think I got some like leadership videos I need to watch as well. So just continue, keep learning, like, because once you got a plan, of course, you're knowing like, hi, what area I want to focus on. And like what skills you want to actually pick up, like, and then you will actually have you will know like, oh, okay, so I'm going to read a book, or I'm going to watch some videos, or what you're going to do. Yeah. So this is all part of protecting your financial potential, because at the end of the day, your financial potential all come back to, your incomes and things like that. And your income is actually because of your knowledge, like in your career, in your industries and things like that. Yeah. So continue, just keep learning through the book, videos, webinars, and things like that. Yeah. Okay. All right. And make sure you always have a buffer. So I can't stress this enough. Is I always talk about that at least you need to have a 5% of your total borrowing as a buffer. So this means that it might be like and very often we're using this revolving credit. So say like if you got $1 million borrowing, so you need to actually have at least $50,000 like a buffer there. Okay. And also like 10% is better. So if you got $100,000, this had to be available credit, for you. Okay. And of course, insurance is very important, because I was insurance manager. Yeah. But we love those people that they either have a no house or they have one house. Because what happened is I keep talking about this, if you only have a one house, the problem is like you cannot lose, you can't afford to lose it. Okay. Yeah. However, if the property investor, it probably doesn't matter because usually their LVR is quite low, and also they can easily sell down one property to actually free up their cash and things like that. But for people, therefore, those of you that haven't bought any house, you can't afford to losing your earning ability. So income protection is very important. Your medical insurance is very important. Yeah. If you already got one house, you know, you probably had to add on like a mortgage repayment insurance and all sorts. Yeah, all those one. Yeah. So make sure, you know, also review your insurance as well. Okay. All right. Okay. And then this one is to build your passive income. Very, very important because you want to make sure that without you had to go to work, you still got some income coming in. Okay, so you're not panicking. So basically, you don't need to rely on your own income. Okay, so if you are employee, of course, I think the way you can do it is actually just build up your property portfolio. Okay, and that will actually give you the passive income. Okay, if you are in business, there are things you can look at. You know, so I can give you an example. It might be like you are GP or something, and then you can always set up those plans. It's kind of like a regular health check or something, you know, and you can have your patients, you know, probably have to see you every 6 months or a year, and then just do a regular checkup. So in some ways, it's good for them because if only wait until they're sick, they come to see you, probably gonna costing them more money and also like time of work. You know, and also more stress. Yeah, okay. But doing a health check, it might be quite a good idea. It might be like you are installing something for people. Or say like installing a security camera. So you can always do or just providing this like annually maintenance plan or something like that. You know, all sorts. You know, so you can always have something that you can build in as your passive income. In our case, it's like we got these mortgages, and so we do have a trail income comes in as long as the customer actually have mortgage with us, and there are 3 lenders. They kind of provide this like a trail commission for us. Yeah, so that's what we continue to build on the passive income. Right. Okay. So let's look at the the GSC. Sorry. So I was working in a bank when GSC hit, and I still remember that moment because I was in the back office at the ASB Botany, and so because at that time I was insurance manager, so kind of like a traveling, you know, traveling around in the different branches. We got access to all the centers and the branches and everything. Yeah, and when they hit it was like I think it's a American dollar things. So there was a huge impact there, and people were panicking because you know we have people started ringing for those redundancy payments and everything. Yeah, and insurance company that react very fast, so they just come out and say, well, we're not going to pay anything if for the new policy they come on board, they need to have a 6 months to stand down. And I think a lot of you, if you take out the redundancy cover, you actually found that's always been there, like a 6 months stand down period. So you won't get paid if you get made redundant within 6 months. Yeah, okay. If you are actually claiming the redundancy payment, make sure that you are not going to work in any form of work. So it might be like you helping out your friend. You know, like for a day, that's actually considered a work. They will stop your redundancy payment. So make sure like you fully understand if you claim the redundancy payment right now. Make sure you actually fully understand the policy wordings. Yeah, okay. So with the 2000 and with the GFC, I think that time it's because it's a financial crisis, and leading to that was the bank being really reckless. Yeah. So it's very unfortunate that we've seen this. I was working in a bank, and what I see was like the bank was just crazy. Yeah, because now we got this like a loan to valuation ratio, and I think like you struggle to probably trying to get 90%. I mean, if it's investment property, probably 70 or 80, you know, for a new build or something like that. But back then you can actually get like 100% lending or 110%. So basically, like if you want to borrow $500,000 to buy a house, the bank actually not only giving you 500,000, but they also were offering you 10%. I mean, like not 10%, $50,000, you know, for you to buy the furniture. It's a bit crazy, yeah. and we don't really check income at all, and pretty much just a decoration, a sale decoration. I think they come up with this this idea called low document, so low doc loan. So basically the customer can just sit down with us and then declare their income is whatever, like they can sit down there and say, oh, Lucia, I made $90,000, I signed this piece of paper, and then that's it. Yeah, okay. And then we were doing mortgage for them. And overseas income's even crazy. I mean, just a piece of paper, and then the bank don't even actually ring and confirm whether the company exists or not. Yeah, it was just crazy. Yeah, okay. So it wasn't surprised. I had seen people I know, and one was actually a very close friend. Yeah, and I think because they are actually in this like a building development. So the developer, the husband's a developer, and I had seen them having a really, really tough time because very unfortunate. They because at the time she told me that she had to come out with $10,000 every month. She every month she had to try to go and find this $10,000 because at that time the mortgage rate was really, really high, and Reserve Bank was they were continuing raising the rate. It was that was before that, yeah. So it was really, really high. Yeah, I think that at the end they did eventually get rid of staff, but I think they lost quite a lot of money. I have heard other people they're also losing money at if they're investing in properties, they're also losing money as well. Okay. However, obviously that's all past now. And later on when I was working at ASB, I think the bank are also handling quite well, and none of the people actually got made redundant. So what I did was they actually asking all the executive to actually reduce their hour. So basically, like they reduce like from 8 hours to 7 hours. So they still had to go to work 5 days, but they only get paid like less hours. So pretty much it's taking the pay cut, because you understand like people probably still work 40 hours, but you just like basically like just you taking a pay cut anyway. So that's the way they're handling. I think they actually did quite well, during the GFC. And I think the bank actually later on introduced this Responsible Lending Act, which is actually helping the industries more become stable, because the financial services, it is essential services, and they need to be stable. People need to put trust into the bank and things like that. All right. So now we're going to look at it is, yes, it's a crisis, but don't forget that there's actually crisis in Chinese character. I know some of you are actually Chinese, you will recognize it. And so the first character in, it's actually is mean danger. So danger, okay, so that's crisis. And then the second character is mean opportunity. So just remember that where there is a crisis, there are always opportunity there, okay? And I'm not saying like just go into the market to buy property cheap or something. What I'm saying is like there will always other opportunity, and I guess like a lot of people are going to in business. There will be a lot of like new like innovation comes up, like inventions comes up, like so they are always looking at like okay, what opportunity are there, rather than oh my god, it's a crisis. Yes, yeah, it is, yeah, but like just look at what opportunity are out there. And I guess some of the people now, they probably realize that the careers or like delivery, like because that's what happened in China was all those restaurants they are unable to. All the restaurants have been shut down, and then but they got all those workers, those are waiters. They still had to. Those people they're losing their job. So what they do is like they actually having this like a share those workforce. Yeah, so they have a because their delivery was actually taking off the career, because the food need to be delivered, the grocery need to be delivered, like all those, like the medical supply need to be delivered. Yeah, okay. So they actually just share their workforce. Yeah, so they're just keeping people in their jobs as well. Yeah, so just always looking at like, hey, what other opportunity? If you are in your industry, what other opportunities? You might be actually come up with something awesome. Like have a great idea and things like that. Planning that. Study planning that and things like that. Okay, so look at it. What is the opportunity? And now we're going to come back to talk about the property market. Okay, so and as you can see, the house price is never ever go just one straight line. So it does goes up and down, up and down. So if you actually look closer, it's always like been, you know, like it does what we call is a cycle in a cycle. Yeah. So basically it does have to go down. And then they probably have a goes, you know, even the ineditor cycle is still got a little cycle in there. Yeah. So just bear in mind that, you know, the house market is certainly going to be quite stable. And I think governments make it really clear that they don't want people to losing homes. Yeah. So that's actually a very good signal there, is like they don't want people to losing their houses. And absolutely, the housing market is certainly the government want to support, because the housing market is actually our backbone, you know, like our economic backbone. Yeah. So it's very important because, regardless, I think they're just going to save this market. Okay. So if you are already in property, you know, got your house, or like you are in property investment, sure enough that you can be safe. And some of you probably been investing for 30 years. You probably gone through like more than I have been through. Yeah. You know, like all those times, you know, it's always go up and down and things like that. Yeah. And you know, obviously there are lots of, you know, opportunities just, you know, in right now, you know, like out there. Okay. And this one just like Auckland house price. Yeah. So I always encouraging people to investing in Auckland. And the reason being is very simple. It's the safest place. Why is it being safe? Because you know, majority of people is living here. Like we got 1.6 million people living in Auckland. So pretty much 1/3 of the population actually in Auckland. So when it's come to the investments, always being safe first. Okay. And then started talking about like your yield, the returns. Okay. Because I think there are some people learning their property investment long time ago in 80s or 90s, because it's really, now you have to using different strategy, because at the time the interest rate is really, really high. You know, you're talking about like, I don't know, like 15%, or as you know, some people said like 20% or whatever. So yes, you have to be focused on your yield, on your rental return, but not anymore. The interest rate is really, really low now. So what you should focus actually is the capital growth. Yeah, it's the, well, no, this property actually giving you the capital growth. And then you look at it, how can I increase the rental income? And there are ways, you know, in our property programs, you know, like we actually teach people like how to actually create, through the renovations, adding bedrooms, conversions, you know, or like developments and things like that. Yeah. So we actually teach people. We're also helping people to go through the journey as well. So that's in our property investment program. Okay. So we nearly finished now. We're just going to cheer up you a bit. So that's just someone that's talking about cooking. Yeah. So that's actually someone come up with a coronavirus dish. Yeah. So this one obviously is a meatball. I need to put a bit of like a mushroom there. But if you're a vegetarian, you can always just having a veggie ball, you know, like basically just all those mix of the veggies and flowers, you know, like things like that. Yeah. So that's the end products. Must be quite yummy. Yeah. It's probably not very healthy though, because it's deep fried. Yeah. All right. So how we can help? And certainly our team's here, and you know, we're walking through the lockdown. The team's still pretty busy. Trust me. So it's still quite interesting, because we got so many inquiries comes in. People are asking what to do with their mortgages, and you know, all sorts. And we still got like some people that want to get ready. You know, like because they want to be just get ready, have their restructuring, refinance, sort it out first, and then having a pre-approval. We still get a pre-approval done, sent through the bank, from the bank as well. So we are here to help. And the best idea, and the best way to do it is probably email us first with your detail, with your contact detail, and the best time to contact. Because I know that some of you probably working from home, some of you probably having a time off. I don't know. Yeah, and then we can actually call you back as well. Okay. All right, so I think that's probably all from me. So I'm probably going to close this. And then here. Okay, we got some questions here. All right. Okay, so what are the questions? Let me have a look. I think we kind of covered that, isn't it? Yeah, okay. So is there any specific requirement or disadvantage of applying for mortgage holiday? So, and I think I covered it. If you really, really have a cash flow issue, then use the mortgage holiday because it's like defer your payments, and things like that. And then certainly have a look at like what because all different banks they kind of like provide a different slightly different solutions. Okay, so we're happy to actually just help you to review that as well. And the disadvantage is probably it's going to have a record in your credit check. But since now everybody is doing that, it's probably not going to have a much impact at all. Okay. Right. The effect of the virus on the property market. I mean, obviously now it's lockdown. We won't be able to have an open home. We can't see the property, and I don't believe that was like a virtual tour or something. Because all they're trying to get you to see what they want you to do to see, and sometimes you don't know whether it's actually what's the surrounding area and things like that. So I'm never ever encouraging people to buy the property without seeing that. I always like at least you do a drive-by because you can have a feel about it. And the feng shui things, like feng shui is Chinese things. Look at like I don't know how can I describe it. So it's a feng shui, okay. All right, and what else? What other questions? I think we answered it now for Nash. So how long stay on the interest only loan for? The maximum is actually 12 months. Okay. Lucia Amber and Lucia share the same. Yes, because Amber is my husband's surname, and so at some stage I saw I need to change my surname, but then I realized that no, I think I wanted to actually keep my Chinese name, because obviously if I say I'm Lucia Xiao, people might expecting a white person talking to them, so I don't want to have under delivery things happen. All right, so is the mortgage holiday only for owner-occupied, and how about landlords? Oh, okay, all right. Interesting enough, because it doesn't say it's owner-occupied though, so it can apply for the investment property as well. Okay, so that's done. The video is still working. The problem is they can't inspect the property. We do have we actually have a couple valuation done right on the day the lockdown. I think it's a Wednesday. So I think we had a couple valuation actually done, but different valuer though. So what happened is like they didn't actually go into the house because I think the tenants was a big concern. So basically what they did was they did a outside. So we actually still got a report, and then the video since got nothing to do, because we got a report the next day, Usually you kind of had to work for wait for 5 working days, So unfortunately, because the video is not essential, so they can't really do anything right now, Okay. What investment opportunity do you think will come from this crisis? Oh, okay. I think that's just that's really broad. I mean, obviously, property is the one that we always been doing, but even in business, it's still a lot of opportunity out there as well. So really, I think that maybe focus on like when you are coming into the investment, why you're doing that? Because I get my customer to do exercises. If it's a property investment, why do you want to do property investment? Why is a property investment is going to helping you, sort of things like that. Okay, so you can always like look at because obviously they are so because humans' minds it's great, we're very creative, so I might actually hear from you if you come up with some awesome ideas. Oh, thank you, Walter. We got met. Is it right understanding company get per person but need to pay 80% of salary of? I think so, but I'm not expert on this. That's why I actually asking an accountant to actually run a webinar. So that will be next week. So you can actually just ask those questions to to the accountant. Okay. Video answer, but we are on a limited inspection. Oh I was so Andrew is a video, but I think Andrew is at the trial care center, right? Okay. Renters 6 months, no rent increase. Yes, that's correct. Yeah, so they cannot have this rent freeze. Yeah, so we're not allowed to increase the rent. I think it will be nasty. You trying to increase the rent right now. We actually seen even like in the bank, all the bank they actually reduce the rate, and even including the non-bank lenders, we have a non-bank lender actually decrease the rate. Yeah, but it's quite funny now that we did have a Australian non-bank lender actually increasing the rate. So I wasn't happy about it. So I just like talk to the our aggregator, and I think they're actually talking to them about it. Yeah, okay. Who pays you the fine? The government? Oh, I really don't know. Like I don't know who is paying that because our business is not in the position to actually apply those subsidies. So I got no understanding of what's who's paying this. Yeah. You need to try to pay 80. Oh, okay. So Alicia actually answering the question, mate. Like you had to try to pay 80%, and some won't be able to. It to be at least, yeah, okay. Employer apply for the subsidy. Okay, so that's all been answered now. Okay. Okay, so someone actually put a link there. So if you want to look at a subsidy link, yeah. After the lockdown, how long do you think opportunity will be announced for before the boom? I personally think the boom is probably not for another couple of years. Yeah, so you still got very great time right now to actually invest. So we still, yeah, I mean, they are like what you focus is on the good property rather than cheap property. Never ever buy cheap. Always buy quality. But yes, you just want to actually work on whether or not you can negotiate a bit and things like that. Yeah, but always go for quality. Quality. Yeah, you never overpay on a good quality property, but never ever buy cheap just because it's cheap. You buy it. Yeah. Okay. Do you think the bank will further tighten their lending criteria? I don't think so, because the bank they still want to do the business. I think one of the bank they're tightening up. They say only the new. They don't want to actually dealing with a new to bank. It's because they got so much workload. Yeah, and I think that's only temporary. They didn't say they it's only just temporary at the moment. They're not doing it. Yeah, so I don't believe that they will be further tightening up there because they still do the business. Yeah, and I think overall the economy, the New Zealand, the New Zealand government respond quite well. Reserve Bank New Zealand is doing quite well as well. So overall, I think the economy was still, yes, we're going through a bit of difficult time, but we were going to come right. Yeah. No rate increase. What about Framet? I think it's the idea to just not increasing their rent right now. Yeah, because everybody kind of going through the hard time. Yeah. Have you been following what's happening in the USA? The virus is expected to get out of the control due to yes. Yeah, I think they're really slow. Yeah. Which will trigger. Yeah, I think that's what happened. Yes, yeah, that's what I'm worried about. Is they're printing money, yeah. But I guess even in New Zealand, when they're releasing those monies, it's pretty much just more, more capital available on the market. So it's when it's more when it's more money on the market, it's terrible because the house price is probably going to go up. Yeah. Okay. It's I don't know about the market because I keep saying to the customer is you only buying particularly one property, so you never ever buy a whole market. So forget about talking about market. I always looking at just the individual property, and you want to buy a good property, yeah. And if you're buying a good property, you're not going to see the decrease on the value there. So I wouldn't be too worried about it. The decrease on the value, because if you're buying something like the one that we're teaching customer to buy, the one that on our property listing is actually good property that, I am confident to say even during the GFC, what you've seen is Auckland only, I think Auckland went down 5%. So that was some regions went down to 30%, which is horrible. Yeah, but just always stay in safe place, which is in Auckland. Just invest in Auckland. That's my view. Yeah. Yes. Yeah, I think the Buntam will probably another couple of years. Yeah. Yes. Okay. So that's all from me. And if you got any suggestions, just email us. Yeah, because I've been thinking about like what other topic I'm going to talk about. Whether or not I'm going to just make myself available like on a weekly basis, and then you can just file your questions or something. It might become like a Google Hangout things where people can actually like just you can actually we can hear you like if you like a sort of things like that. But let me know if there's anything I can do better, I can help. Just let me know. All right, thank you, and enjoy your rest of the day. Bye.